How's it going, everybody? It's Thursday. It's Thursday, April 23rd, 2020. Let's talk about the stock market. Let's talk about companies. Let's talk about the economy. Done some more work on this stock application. I'm going through thousands of stocks. I'm not quite there yet, but there are a ton of them. There were almost 3,000 when I started. We're down to 2,912. I'll probably get it down to about 2,000. I'm removing things that I would never invest in, like Chinese energy or something right now. Not doing any of that. But what I do want to talk about are the winners, the losers, and also stocks I'm keeping an eye on because I have a way of keeping track of them now. So interesting market day overall. Like the Dow Jones was up on Wednesday, and some big names did pretty well. The biggest winners of the day, ironically enough, were all in this energy, oil and gas, energy equipment sector. Looks like there were 7 out of 10, I believe, the top 10 winners. And I have them down bad companies. If you look at their, they shouldn't have made a lot. It screams that this is probably going to go down in the future. I think one of the comments I made was that, yeah, it's going down tomorrow. Yes, Whiting Petroleum, that has a microcap of 77 million, just looks like when you see that there was 162% of the stocks were traded or something volume-wise yesterday, that just looks nutty. What you can see happening here and why there are these big gainers in the oil and gas and energy sector right now, but they're also big losers, is that with the price of oil going way down because we're all not moving around and using the oil like we used to, or using transit, flying, things like that, the consumption is way, way down. So we don't know what to do with all this oil. Now, people think and they assume that, of course, we're going to go back to normal sometime, right? And then there will be the need for oil again, and things will get back to closer to normal. We're in this weird transition, though, and people are scared of going outside and traveling, especially being close to other people and talking to them and breathing in their air. All these transportation ways that we currently do it, using oil with planes, and it's not going to happen anymore. And so these things are going to go down. And I would say short, like all of these have really ugly charts. You can see them all going down. They're just getting saved a little bit by some investment to try to save the industry, especially if they're American companies putting it out there. But this is all long-term bad stuff. So all these winners, when you really look into it in the energy sector and why it's happening, they're all pretty small caps, micro caps. Look at there. This is dangerous stuff where it's probably going to go down the next day. All right. So let's then look at all the biggest losers for a second. Okay. So ones that lost the most. I'm going to grab their tickers. By the way, the one that lost the most on Wednesday was like the biggest gainer, the second biggest gainer the day before. Thought that was kind of funny. Let's see, 10. I think these are the top 10 we're going to grab if it'll let us do this. File's getting a little easier to work with. So when you look at these companies that were the biggest losers of the day, this one, look at that, has this huge spike the day before. If you look at this company in the last 10 days, you can change the charts around. It looks like it goes straight up and then it goes straight down for 30%. Right on this day. You don't see it at the end of the chart because it's the current day basically, but this is a $4.2 billion market cap company, man. Like craziness. Energy, right? Tanker companies. Yeah, they're going to be oscillating just like the waves. You don't want any part of this. This is crazy volatility with long-term outlook being bleak in those sectors, in my opinion. So energy, Discovery Communications. Wow. Is that right? Mm-hmm. They were on here. I think they were they were a big gainer the other day. Now they come down. Watch those high volatility stocks. Communications Media. Dillard's. Oh, one put out about Dillard's. So your specialty retail stores that are not Walmart, not Target, that don't have a really strong online presence. Look at my comment. The comment is check for a website. If the website is bad, short the stock. Your Bed Bath & Beyonds, your Dillard's. I mean, Bed Bath & Beyond might have a decent website, but I don't think they're going to survive because their product line doesn't fit with how we want to order now. It doesn't work. So to see Dillard's with $522 million market cap. These places are going to be closed. Places within malls. I saw American Eagle. I forgot to talk about that. Your stores that are in malls, these things are going to be closed. And if they're open, the public generally doesn't want to go there. Maybe your teenagers will go out and venture because they're not as concerned about their health and not hearing about their friends dying. But I think that there's this overwhelming fear that until we have a real treatment option or a vaccine that prevents people from taking on illness and being permanently impacted by this virus, we are all scared little bats just not wanting to go out into the open. Every person I've talked to who is at risk, people that are in their 60s, um, everybody feel at risk and you get scared. This is totally going to affect the economy. And so places like these mall stores are just not going to get traction and may even remain closed as we do this for months. So you really want to short this. Overstock.com, they're in the online realm, but they apparently, I don't trust them. I remember their CEO dumping stock or doing something weird. I don't know if he's still the CEO. I think they got rid of him, but I don't know enough about that company. So those are some big losers. Watch out. You see the oil going back and forth. To stay away because it's got long-term trouble. So let's talk about a couple columns I've added here that are related to watch price and ceiling price and how we're going to look at this every day to get an idea of what stocks to really watch, not just the losers and the winners. That's a good way to look at the extremes. If you think, oh, if I had put money on this biggest winner today when the stock had opened, I would have made 30%, 20% or whatever in theory. Or if I had shorted the one that was the biggest loser, I would have, I guess, made money if you get the money and then sell it. However the shorting works, like you would have made 30% probably on your money or something had you shorted this at the beginning of the day and then sold. Whatever. Point is, I'd rather talk about stocks that I want to purchase and how far away they are from a target price. So where we're at right now is the number one on the list is an interesting case situation right now. LYTS, which is LSI Industries. If you can't see that because of my face potentially. LSI Industries, what this is an electrical equipment components company. They make screens and screens in gas stations and fast food. And they're based in like Ohio. They're American. I think they have inventory and stuff to do this type of work. I see the screen business as a sneaky way that analysts aren't thinking about how we're all going to change the way we communicate and touch to do stuff. It's so much easier to have a bunch of screens lined up 6 feet apart, people walking into a store, touch what they touch on the screen, and then the screen is just cleaned afterwards. Somebody walks around and cleans the screens afterwards. So it's a pretty clean thing for you to be touching. You're not talking to anybody else. You're not breathing in their air. You're making your order. Your order's then done. Your order gets laid out for you. You go pick it up and walk out. You're not communicating closely with other people. You're not potentially taking in a heavy load of particle, virus, or inoculant load. So I see the screens as being a part of our everyday communication life because we're going to limit our interactions with humans in these high throughput things like going to the gas station or going to the fast food place or going to wherever to get something that is an order type thing where you don't have to talk to somebody. So this company is announcing earnings today, Thursday, probably in a few hours. They may or may not have good earnings. I don't really know. However, I do know that I'm sure that more people are going to be ordering these screens, and this is an American company providing it and doing the work, so they're going to have to get some spillover work eventually if demand is there, which I know it is. So I feel it is. That's my analyst perspective. So I have a target price of $5.30, which is right what it's at right now before earnings, and I have a ceiling of $5.50 because what I expect will happen here is they'll get slowly more and more and more business and get into a financial shape as more and more companies realize that they need touchscreen type things and the parts that they have for it. So as long as they don't have a supply issue, I see their stock going up to like $7 even. But because it's going to take a while as we all shift and, they have to physically do the work, which is not like a company that can make a ton of money before it does the work. They actually have to go out and physically do these things and build these systems. It takes a little longer. So my ceiling price is not as high because I don't think that the upside is better than like 10 or 20% on your money in the next few days probably or month or so as people realize this. Next, let's talk about how we can look at all these stocks and look at their histories as well. Show you this. So I have these stocks sorted by percent of watch price, which means as we bring them in here, what it's going to show us is that we are able to see everything kind of in order of what you would buy them at based on that formula, meaning the lower percent of watch price means that your watch price divided by its current price is what you get. So if it's under, if it's the higher it is, the red it is, the worse, the further away you are from it. Like I'm really far away from Netflix's price, which I'll talk about in a second and why that is. But we're going to go through the list. So Abbott Laboratories apparently is my second best stock to pick up right now. Abbott Laboratories is selling about $95 right now. The comments I have on them, they're in demand and they will be for the foreseeable future. Testing, testing, testing. It's part of our everyday life. It's going to be. They're a company, I believe, based in Temecula, California. They are on top of it and they are doing well, and their stock is surviving the normal fluctuations of people trying to make money off of it, and they are going to have more and more and more and more business. So, I mean, they got $168 billion market cap. Their volume is normally 14 billion. I don't know. We don't have to go into all the super details. I don't want to make the video forever, but I like them. And apparently, according to what percentage they were, I said, if they get down to 85, definitely take it. I'll even take it now below 99 because this is over $100 stock a month from now. And going onward, most likely, I think it'll average over $100. So that's kind of like my ceiling there. Microsoft's at 173. I've talked a little bit about actually I haven't talked too much about Microsoft, but they're a powerhouse. I love Microsoft and their products. They maintain entrenched and of course are a digital type of company in many ways, so will flourish in this work at home phenomenon world most likely. If they get down to, I believe it was 150, then I say go for it. Their ceiling I put at what? I said their ceiling's 170. I don't know about their ceiling so much. I just know that if it drops below 150, I'd pick it up. So I really, my ceiling is probably 152 right now because they're a little up top and overpriced in what's going to be a really devastating economic tolls that are coming, which I'm going to talk about also in a little bit, and some other companies that lost. So the next one is Amazon. Amazon, because they're in all of our lives and are going to be delivering things for the foreseeable future, and they're not going anywhere. So I think the target price was 2,000 and they're at 23.63. I gave them a 2250 ceiling because they're going to stay above 2000. They may not ever drop below 2000 ever. They may not drop below 2000 in the next 24 months. You can almost quote me on that. It has something amazing would have to happen, unforeseeable, because the way they're going, they're going to be a part of our lives. Next one I have up here is Wendy's. And the reason why I have Wendy's up here is I always liked the way Wendy's set up their restaurants by having drive-thrus and having them always like a mile away, at least from a McDonald's or a lot of other strip mall areas with other type of fast food. They place their stores in weird ways where they're the only one there. They're open late. They got a drive-through. They are going to maintain a customer base. The lines around. They have cheap food that fills you up. Like they hit a lot of buttons. I like them better than McDonald's because their share price is much less expensive and the swings have been good. Like I remember it was down at like $14. I got a little bit of at the low, like when this started, because I knew this about Wendy's and how they were going to thrive in this new drive-through economy. So the price I have on there is 15 is the watch price. If it goes down that low, if the market really hits the bottom and has the rug pulled out from under it, as I think it will over the next month or so, but even up to 1650. So I'm not buying it right now because even though I think the target price is actually about 20, you can bring this down to 17. If you get that under 17, Wendy's is probably worth it, but you might want to wait if it's on a downtrend because of everything else till we hit what appears to be a bottom. Google I talked about yesterday. They're a good buy down at 1,000, but even up to like what, 1,250? I gave them a ceiling. What did I say? I said $1,500 ceiling. That's right. I am bullish on Google in the long term. So I'm saying buy them right now. Here's another way to look at what you should be buying. What's the lowest percentage of the ceiling price? This is a new way to sort it. In this way, Tesla's number one, meaning I think that Tesla's target price is like $1,000 a year from now. I'm going out a year from now, but it might be there sooner. And so when I see that, I see Tesla at 732 right now. Well, that means that, when you look over Tesla, that they're only 73% of where I think they're going to be in a trajectory in that direction. So even though they're ranked number 9 on the list of watch price, because I want to get them at 500, I think they might drop to 500 with all the crazy economic turmoil and people not believing that they're really going to pull it off and all the other external factors of the economy impacting everything. So that's why I have this lower I have a bigger range here, but they're still a good buy because in the long run, they're a good company. So let's look and see if we want to talk. I won't talk about other sectors that are losing. I just want to finish this list. Walmart is strong. I talked about Walmart before. Regeneron I have on here because they're one I looked at. Don't trust me on this Regeneron. I haven't looked into this enough, but I have them as a buy simply because I think they're involved somehow. But don't trust me on this one. Tesla I still like. Now Netflix. Let's finish off with Netflix. Now Netflix. Look at how low I put my price on Netflix. I put it down to 250 and I put my ceiling at 325. And I even talk about ceiling. So Netflix, which is at 421 and just crushing it, had earnings, they have more subscribers than ever. How can you be so low on Netflix? Here's why. What's my notes say? Great company, but barriers to entry too, I even spelled too wrong, too low to justify the what? To justify the price. So here's the problem. I've lived without Netflix before. There are a ton of streaming services, and there's YouTube, which is free. It doesn't have movies, but it has a million other things. A million times infinity, basically almost infinity. So Netflix doesn't necessarily have as much of a hook into you as this is what warrants, okay? Really? $184 billion for an online streaming service that's completely discretionary. Nobody has like heroin withdrawal from not watching Stranger Things. Doesn't happen. So this is a lot of money. We compare them to some other companies on here, market cap wise. They're 3 times as much as Regeneron. I mean, that could be true. They are, okay, they're half what Walmart is. No way. The world can survive without, I do like a series. Hold on. The one with the tech in the future. I haven't watched it in a while. I don't have Netflix right now. I didn't subscribe. I used to have it. I don't use it because I'm not stealing anybody's account anymore. I'm trying to be a good person. And I haven't used it. Black Mirror. Black Mirror is fantastic, but I've been able to live without it. They had new episodes and I missed it, and nothing happened. The world cannot live without Walmart. You cannot live without your baby diapers when you're living in the middle of the Colorado mountains, which is why we shouldn't be drilling for oil in the middle of Colorado. We should be populating Walmart with essential things that we need. And that's how the economy is adjusting. And so this list here is quite interesting because they're companies that are going to survive in the future and are going to flourish, and in some cases have reasonable prices right now. So that's the update for today, Thursday. Watch LSI. I could be completely wrong and they have nothing to report and their earnings are crap. I could be wrong and be ahead of the game, hopefully thinking that this is something that takes longer, or I could just be wrong and nobody gets touchscreens. But maybe I'm right. And if I'm right, I bet you the stock goes over $6 a share tomorrow. That's what I'm counting on. I bought some yesterday. I weighted averaged a couple for the last few days because I think the world's changing and it's time to place your bets on the direction you think it's going to go and why, and hopefully when you want it to go. Hey, it was like Earth Day yesterday, I think. What a better way to celebrate Earth Day than all of us being forced into not burning fossil fuels as much as normal and the sky clearing up. That's hilarious. Like Mother Nature just pulled the rug out from under us and said, you have to live like this. It's a funny Earth Day, an Earth Day like we've never had before. And there are unintended positive externalities from this lockdown. And they may be pushing us in a global direction to do things differently. One, because we have to, but also because we needed to anyway. So the market is reflecting that, and it's the only thing going on right now. It's the only thing to watch. So sit back and grab your popcorn. If you're not going to Netflix and chill, you should watch the market and chill. All right, we're out. Happy trading.